Hi, my name is Eric, and I'm head of fixed income for Harvest Global Investments. Today, I'm going to share with you the key reasons why we continue to like CNYFX and CNY onshore Chinese bonds. Chinese fixed income investments is really driven and supported by three pillars. The first is that why we continue to like CNYFX is because of the favorable trade environment, with Chinese exports continue to be strong. And second and third is really being exposed in a market which offers you high nominal and real yields, with a central bank which is very accommodative on a continued loosening bias, which is especially important in an environment where globally everyone is hiking rates. As you can see, the Chinese bond market year to date has been offering a positive yield performance versus the rest of the world, which is namely suffering from high inflations and central banks forcing to hike rates. A lot of the global bonds and US bonds are returning a negative -6 to -8%, whereas Chinese bonds are offering you a positive return. And as I mentioned on the first pillar, the FX is a very key component to Chinese fixed income investments. Ever since the pandemic, and because of the favorable export conditions, with China treatment on zero COVID policy not disrupting exports, Chinese exports have been resulting in China leading back into a positive trade balance account surplus. And on a monthly basis, we are talking about a 60 to 80 billion US dollars of surplus, which supports the FX as well. Apart from trade, with the allocation from foreign investors into China, ever since 2020, we have seen foreign investors investing a record 270 billion US dollars into the Chinese bond market. And this does not include the Chinese equity investments. Finally, as I mentioned, the environment for the bonds is very favorable, with China offering one of the highest real yielding and nominal yielding instruments for its rating. The FX performance over the last 2 years, especially over the last 3 months, where geopolitically we have been facing some uncertainties, China CNYFX has been very stable and on a slightly appreciative tone. This is not just compared with other currencies within the region, but if you compare with other currencies within the developed world, such as euro, sterling, and yen, those currencies have actually recorded a very significant depreciation, and whereas China has been offering a safe haven status at the same time. And this concludes to why we continue to like investments into CNYFX and also CNY bonds for the medium to long term. Thank you.